Are you running an LLC but still confused about how to pay yourself? Should you take a salary, pull money out directly, or wait until profits come in? Many new entrepreneurs make mistakes here, mixing personal and business funds or not setting aside enough for taxes. This confusion can lead to IRS penalties and financial stress. The good news is there are clear, legal, and smart ways to pay yourself from your LLC. In this video, you will learn how to pay yourself as an LLC. Owner's draw for single member LLC. If you own a single member LLC, the easiest method is called an owner's draw. Here, you simply transfer money from your business account to your personal account. For example, if your LLC earned $5,000 in a month and you need $2,000 for personal expenses, you can withdraw that amount. However, you must remember that these draws aren't separate from your taxable income. You'll still report the full profit on your personal tax return and pay self-employment tax. The smart move is to keep records of every transfer and set aside around 25 to 30% of profits for taxes. Paying yourself a salary as an S-Corp. If your LLC elects to be taxed as an S-Corporation, you can pay yourself a salary just like a regular employee. For example, if your LLC makes $100,000, you might set a reasonable salary of $50,000 based on industry standards and take the rest as distributions. Your salary goes through payroll with taxes withheld for Social Security and Medicare. The benefit is that only the salary portion is subject to self-employment taxes, while distributions are not. This method can save you money, but it requires payroll setup, compliance, and good bookkeeping to keep things in order. Profit distributions for multi-member LLC. In a multi-member LLC, profits are usually distributed among owners based on ownership percentage. Let's say your LLC made $60,000 profit and you own 40%, while your partner owns 60%. You'll receive $24,000 and your partner $36,000, regardless of how much each of you worked. These distributions are taxed on your personal tax return, not through payroll. To avoid conflicts, always follow your operating agreement and document every payout. Many LLC choose to distribute profits quarterly, keeping enough cash in the business to cover expenses. This makes income predictable while ensuring the company remains financially healthy. Best practices and examples. The smartest way to pay yourself is to combine discipline with planning. Always keep business and personal accounts separate and decide on a fixed amount you'll withdraw monthly, just like a salary. For example, if your LLC makes $4,000 monthly and you need $1,500 for personal expenses, pay yourself that consistently and save the rest for taxes and growth. Use accounting software or hire a professional to track everything. Paying yourself randomly can cause cash flow issues and tax headaches. A structured approach ensures you cover personal needs, reinvest in your business, and stay stress-free during tax season.